Hey everyone, welcome back to The Investing Iguana. In today's video, we're going to dive into the world of banking and explore which of Singapore's three major banks, DBS, OCBC, and UOB, offers the best investment opportunity. With all three banks recently hitting record highs and delivering strong profits, many investors are wondering which way to go. By the end of this video, you'll have a clear understanding of each bank's performance and which one might be the best fit for your investment strategy. You see, many investors are drawn to banking stocks because they're often considered stable and reliable. But with so many options, it can be tough to know which one to choose. You might be wondering which bank is performing the best, or which one has the most growth potential. Well, wonder no more. We're about to break down the key metrics and trends that'll help you make an informed decision. We'll be exploring each bank's recent financial performance, their market share, and dividend yields. We'll also examine their exposure to regional markets and any potential risks on the horizon. By the end of this analysis, you'll have a clear picture of which bank is leading the pack and which one might be the best fit for your investment goals. The Singapore banking scene is absolutely sizzling right now, and I'm not just talking about our tropical weather. All three of our major banks, DBS, OCBC, and UOB, have hit record-breaking stock prices. We're seeing DBS trading at a whopping 42.44, OCBC at 16.06, and UOB at 35.69. These aren't just numbers, folks. They're a clear sign that investors are feeling pretty darn confident about how our banks are performing and where they're headed. Now you might be wondering, Iggy, what does this mean for me? Well, let's unpack that a bit. These high stock prices are like a thumbs up from the market. It's saying, hey, these banks are doing great, and we think they'll keep crushing it in the future. For those of you holding these bank stocks, it's potentially good news for your portfolio. And if you're considering investing, it's definitely something to keep on your radar. Let's dive into the impressive third quarter results for 2024. Our banks have delivered remarkable performances, and we'll explore the highlights. DBS takes the lead with a net profit of $3.03 billion, showcasing a 15% year-on-year growth. UOB follows closely with $161 billion, up 16%, while OCBC posted $197 billion, representing a 9% increase. Our banks have demonstrated exceptional skill in diversifying their income sources. This strategic move has helped them maintain strong revenue streams despite the changing interest rate environment. Let's take a closer look at their net interest income and margins. Net interest income remains a significant contributor to our bank's revenue. DBS maintains a net interest margin of 2.113%, while OCBC leads with 2.22% and UOB follows at 2.04%. These numbers demonstrate their ability to adapt and thrive in a dynamic interest rate landscape. Let's talk about a standout area of success for our banks, wealth management fees. This segment has seen remarkable growth, and I'm excited to share the details with you. All three banks have reported significant increases in wealth management fees, with DBS achieving record highs in fee income. This is a testament to their ability to adapt and thrive in changing market conditions. The success in wealth management fees demonstrates our bank's capacity to capture high-value business opportunities. This is a key aspect of their growth strategy, and it's paying off. By diversifying their revenue streams, they're ensuring long-term sustainability and profitability. Let's talk about a crucial aspect of our bank's financial health, asset quality and risk management. This is where we see how well our banks are managing their loan portfolios and handling potential risks. The numbers are impressive. OCBC leads the pack with the lowest non-performing loan ratio at 0.9%, followed closely by DBS at 1.0% and UOB at 1.5%. These figures indicate strong risk management practices and healthy loan portfolios across all three banks. So, what does this mean for us? Well, it's a vote of confidence in our bank's ability to manage risk and maintain a stable financial foundation. This is essential for investors, as it reduces the likelihood of unexpected losses. For consumers, it means that our banks are better equipped to support us with our financial needs, whether it's a personal loan or a mortgage. Let's talk about our bank's capital positions. This is a key indicator of their financial stability and ability to weather any economic storms. I'm happy to report that all three banks maintain strong capital positions, with CET1 ratios well above regulatory requirements. DBS and OCBC both boast an impressive 17.2%, while UOB maintains a solid 15.5%. Now, if you're an income investor, you're probably interested in dividend yields. Well, our banks don't disappoint. OCBC offers the highest dividend yield at 5.5%, followed closely by DBS at 5.1%. and UOB at 5.0%. These yields are attractive, especially in today's low interest rate environment. So, why does this matter? A strong capital position and healthy dividend yields indicate that our banks are financially resilient and capable of generating consistent income for investors. This is essential for those seeking regular income streams, such as retirees or those looking to supplement their income. By understanding these metrics, you can make informed decisions about your investments and achieve your long-term financial goals. Let's talk about what's new with our banks. DBS has made headlines with its ambitious $3 billion share buyback program. This move demonstrates their confidence in their financial position and commitment to returning value to shareholders. Meanwhile, OCBC has been busy strengthening its regional presence through strategic mergers, and UOB continues to expand its ASEAN network. So, what does the future hold for our banks? Despite potential headwinds, the banking sector's prospects remain positive. The Monetary Authority of Singapore expects core inflation to moderate to around 2.5–3.0% in 2024, creating a stable operating environment for banks. This is great news for investors and consumers alike, as it suggests that our banks are well positioned for continued growth and success. So, what is my recommendation? If you're a conservative investor looking for stable returns and high dividends, OCBC is definitely worth considering. With its sector-leading dividend yield and strong asset quality, it presents a compelling case for those seeking predictable income and lower risk. On the other hand, if you're a growth-focused investor, DBS might be the way to go. As a market leader, it offers an aggressive capital return policy which could translate to higher returns on your investment. Just keep in mind that growth investments often come with higher risks. But if you're looking for a balanced approach, UOB might be the perfect fit. With its strong ASEAN exposure and steady growth prospects, it offers a middle ground for those who want to balance risk and potential returns. This could be an attractive option for investors who want to diversify their portfolio without taking on too much risk. If you found this analysis helpful, don't forget to hit the like button and subscribe to the Investing Iguana for more in-depth financial analysis. And if you're interested in understanding how these banks generate such massive profits and distribute billions in dividends, check out my previous video, Why Singapore Banks Are Crushing It, 11.5B Dividends Revealed, where I break down the incredible dividend story behind these banking giants.